August 3rd, 2026. In the market, we had a lot of opportunities today because of the momentum being so obvious and strong. So let's go over the situation first, like what's going on a bigger picture on a daily and a weekly, and then we'll go into the alignments that occurred today and talk about what trades you could have taken. On a weekly time frame, we are just straight up in a bearish channel. We're still selling off. But things get exciting when you look on a daily. On the daily, we have bounced off of the 200 EMA, a strong bounce on volume, on rising volume. But we're still coming up to a declining 20 and a declining. This is the 50 and the 20. So we're still coming up against a declining 50 and 20, but we bounced off the 200. But anyway, what I'm trying to say to you is that noticing this bounce off of the 200 3 market days ago, and 2 market days ago seeing the continuation, and 1 market day ago seeing the continuation, you know that in the intermediate, you really want to be ready for longer alignments to the long, to the bullish side of things, and that's exactly what we got today. So in the market open, I'm only trading a window of time right now. I'm not trading the whole market. I'm just trading. Basically, I skip the first hour of the market. I skip the first hour and I trade basically from 9:30 a.m. So market opens at 8:30 where I am. So I'm skipping the first hour and I start trading around 9:30, around right here. And I trade. Normally, I like to trade just for about 2 hours. I don't want to trade the whole day. I don't want to just keep watching the market. I don't want to keep watching the charts. I just want to get in. I want to clock in. I want to do my job and I want to clock out. I don't want to watch the chart all day. That's not what I want. And you don't have to do that if you trade. If you're a trader, you can trade your own way. There's no rules and there's no limits, which is why everybody has trouble trading, is because if you don't give somebody structure, if you don't give somebody limits, if you don't give somebody rules, chances are they're going to lose control of themselves. They're not going to make any progress. So we're going to get into the momentums that happened today. We're using a 1 minute momentum right here, or the 1 hour momentum right here on the left. So it's telling us to look for longs right as the market is opening. We have our long established bias. Now, the 15-minute momentum hadn't really crossed over yet. So we're waiting for the 15 to cross over before we start getting serious. And the first 15 minutes of the market does just that. So the first 15 minutes of the market unfolds and we establish our 15-minute opening range, which is this range right here. That's the opening range, first 15 minutes of the market. Now, again, reminder, I'm not trading the first hour of the market. I like to just kind of sit out. But I did kind of break that rule today. And we're going to go over exactly why. Excuse me. So, right here, we come down. Look at the momentum. We're coming down and we're waiting for the momentum to realign to the upside, like right here, like right here, like right here. We're looking for the momentum to realign to the upside because everything else is going up. So we come down and we want price action to be near our fair value EMA line, which is this yellow EMA line here, which is a 28 EMA on there's a 42 EMA on a 2-minute chart, which this is a 2-minute chart, but on a 3-minute chart where I like to do my trading right now, it is a 28 EMA. It's the same thing, just different perspectives. So what I'm trying to say to you is that our price comes down and it gets close to this fair value EMA and VWAP, but it doesn't really quite touch it. It doesn't touch it like this, right? It doesn't get too close like this, right? That's getting nice and close. And when we have our price come back to this EMA line, we know that that's a dynamic fair value EMA line. So we know that we have a higher different probability distribution as opposed to being super extended. We're like right here, we're really far away from the EMA line over here. So my point is, my first trade of the day was this one, which was a loss right here because we had a realignment to the upside on a 2-minute chart. Now, I was before 9:30 and I was not on a 3-minute chart. So that probably would have saved me. In fact, it would have saved me had I just been on a 3-minute chart. Then I would have entered right here. So I kind of broke a little bit of my rules today, but not really, because the 2-minute chart is okay sometimes. But I like the idea of just using a 3-minute chart rather. So why is this the entry? Why did I take this trade? So just to recap, I took this trade, it was a loss. And then this setup happened right after, and I took this trade, and it was a win. Had I had runners, it would have been a grand win, and I would have made a whole lot of money. But instead, I just went for a 1-to-1 trade, which is right here. Got my money and got out. A slightly positive day. Would have been a break even had these been sized exactly the same, but the sizing was not exactly the same. The win was a little bit larger, so I finished at a slightly positive day. Why was this my trade? Why did I take this? Because the momentum comes down on a 3-minute chart now. Look at 3-minute. Momentum comes down. Doesn't quite break above right here, but it does. And again, that was the loss that I had already taken. So then we get to here, and it realigns to the upside again right here. And I took that trade, and it was a win. Simple as that. Now, let's look at the other opportunities that happened today. Remember how I was telling you, you want the price action, you want your entry price action to be near this EMA line, because otherwise it's overextended and the probability distribution is not the same. Yes, you can do it, it's just a different setup altogether. And right here, look what happens. We retrace back to this EMA line. And what are we doing? What do you see here? What is this? What is this? This is a triple critical level. This is the previous day's high, this is the pre-market high, and this is the previous week's high. They're all three right next to each other. That is a triple critical level. So what happens here at this point in time that I'm trying to bring your awareness to? Well, our price comes down to this fair value area, and what is happening at the same time? This triple critical level occurs. So that's pretty powerful. Now, the first entry would have been this one, which would have been a loss, and that happens sometimes. That's all right. And then the very next realignment was this one, and that would have been a win. So far we have 1 loss, 1 win, 1 loss, 1 win. So we're still break even on the day, okay? If you're just taking all of these setups. The last setup of the day I wanted to bring your attention to is right here. This happens around 12 p.m. Now, I'm kicking myself for not taking this setup. But either way, we come back down to this EMA line area, and then we have this bold candle right here, and we're going to look at this on a 5-minute chart as well to see how obvious this entry was. We're establishing a line right here. We're establishing some resistance, a bull flag you could call it. We're establishing a bull flag, and then we penetrate through the bull flag right here. And I mean, that's just so crystal clear obvious of what's happening. And then that resulted in this nice alignment channel. However, why did I not take this trade? I wanted to talk to you about this, but why would I not take it? Well, because look at the 15-minute momentum. The 15-minute momentum is just dying off so much at this point. We're late in the day. Momentum continuations die off late in the day. So I didn't take the trade because we're just dying off on the 15-minute momentum. So that's not worth it to me. That's definitely not worth it. You want the 15 to be holding straight or expanding. So one last thing before I end this episode. I want you to notice how obvious this setup was on a 5-minute chart, okay? Here's the 5-minute chart. Forget the 15, forget everything. Just the yellow line is your dynamic fair value. Look what happens. We run up, price literally halts horizontal, tapers down to this fair value line, and then we get a massive buying continuation right here with a bunch of buying volume. And what happens at this very time? You can probably guess what I'm about to tell you. We have a momentum alignment right here. Look. This was the entry on a 5-minute chart. Late in the day, 5-minute entries, 5-minute execution time frames are fine later in the day. Look at this. At 12:10 p.m., momentum is not aligned, not aligned, not aligned. Boom. Now it aligns. 12:10 p.m. What does that entry look like? Oh, it's a green candle bouncing off of our fair value EMA line. So this is a strategy for you to look out for when you have these strong trend days on a 5-minute chart, looking for that fair value region and then reading the candles and seeing, yes, here's a level that we haven't broken yet. Here's a strong 5-minute breakage with 5-minute nice volume continuation on the right side of the momentum. So that's how it looks. That's what it is. That's how it looks. With all that being said, that was August 3rd, 2026. I will see you in the next one. Take care now.